Asian Quicktake. I am Jacob. In the second half of 2021, the US began to tighten monetary policy and many currencies experienced declines against the US dollar. But the Vietnamese dong, at this time, surprised the crowd. In November 2021, the US dollar climbed to a 16-month high and the world's major currencies weakened sharply against the US dollar. This was when the Vietnamese dong, surprisingly, still appreciated by around 2% against the US dollar. As we entered 2022, the Federal Reserve raised interest rates several times and the US dollar went even higher, with the dollar index reaching a 20-year high, which triggered global financial shocks and accelerated capital flows back to the US from overseas markets as the dollar soared. In the run-up to the end of October, a number of currencies experienced catastrophic declines. Normally, a stronger dollar would lead to a devaluation of the currencies of other countries, especially emerging countries. However, the VND is one of the few currencies in the emerging region to have appreciated against the US dollar, since the beginning of the year, a rarity in the foreign exchange market. As in November last year, the Vietnamese dong continued to perform strongly with a surprisingly low fall against the US, the third lowest in the world. Going into December, the VND even came out of a wave of gains against the US dollar. The dollar fell to a 3-month low against the VND. It's fair to say that the VND is really tough in the face of the dollar's rising hegemony. The VND remains the most stable currency in the region. So, why is the Vietnamese dong so strong? 1. Economy. The main currency value of a currency still depends on the fundamentals of the economy. After the global outbreak of the epidemic in 2020, many countries around the world went into recession. Vietnam was one of the few countries that achieved positive economic growth during the epidemic. In 2022, Vietnam's economy even recovered significantly in the second quarter, with a growth rate of 7.7%, the highest of any country region in the world. The World Bank has released its October 2022 update on Vietnam's economy. In the third quarter of 2022, Vietnam's economy grew by 13.7%, higher than the level in the same period in 2021. With 13.67% growth in the first 3 quarters, it is essentially the fastest GDP economic rise in the world. Not only did it exceed market expectations, but it also set a new record for the last few decades. Many international agencies are predicting that Vietnam's economy will meet or exceed its growth targets this year, with real GDP growth of 6.9% in 2022, and a continued rise of 6.5 to 7% expected in 2023. In 2021, 116,800 new businesses will be established in Vietnam, with a total registered capital of over $68 billion. In the first 11 months of 2022, Vietnam is estimated to have established around 137,800 new businesses, up 30.4% year-on-year. The registered capital of new businesses grew by 2% year-on-year to approximately $62.7 billion. This buoyant economy underpins the stability of the Vietnamese dong. 2. Trade. This year, Vietnam's economy has benefited from the shift in manufacturing and is slowly becoming one of the world's post-manufacturing centers, with many multinational companies from around the world setting up factories in Vietnam. Vietnam's trade is diversified, exporting a wide range of commodities and products, and continues to record strong growth. Vietnam's economic outlook continues to be positive and the Vietnamese exchange rate will remain fairly stable for some time to come. Vietnam is an active participant in global trade and has been actively signing bilateral trade agreements with countries around the world in recent years. It is a member of the Association of Southeast Asian Nations, ASEAN, which has made it a party to a number of free trade agreements signed by the regional grouping. These agreements guarantee standards of product quality, manufacturing and employee rights that will enable Vietnam to become a manufacturing hub and expand its export base. The EU-Vietnam Free Trade Agreement, EVFTA, has boosted Vietnam's exports in a pandemic scenario. In 2021, the UK-Vietnam Free Trade Agreement, UKVFTA, helped drive trade between Vietnam and the UK to nearly $6.6 billion. The Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, has seen similar growth in exports to Canada and Mexico. Vietnam's business environment is one of adherence to external reform and openness, with the government providing investor-friendly policies aimed at attracting investment and socio-economic development. 3. Foreign investment. One of the biggest reasons for Vietnam's rapid economic development in recent years has been the huge foreign investment. The Vietnamese government has made opening up to the outside world a core part of its founding and has developed a number of policies for greater openness. Therefore, in order to attract more and more foreign investment, the Vietnamese government will also strengthen the regulation and maintain the stability of the exchange rate in order to stabilize the confidence of foreign investors. Vietnam received $17.5 billion in foreign direct investment in the first 10 months of this year, up 15% year-on-year. Inbound FDI is also driving economic growth due to Vietnam's trade environment and labor force. So, even with the persistence of geopolitical tensions, Vietnam's economic outlook remains promising and investors who invest for the long term will reap great rewards. Now it is Vietnam that is an export-oriented country, a strategy implemented by the Vietnamese government to attract foreign investors. It first makes the currency less high in order to make exports more competitive and increase foreign investment. It then slowly and progressively appreciates the currency to ensure that foreign investors will get more returns over time. This strategy has been used before by the Japanese and the Chinese. So, in the future, it is probable that Vietnam's economy will take off.